Hey guys, hope you are all having an amazing day. The markets were closed due to Martin Luther King holiday, but as promised, I have a good DD video for you guys. Many have asked me to talk about what is happening with Evergrande and China from a macroeconomics perspective, with intention of understanding the underpinning of why their real estate sector is in a crisis. We provide daily updates and monitor the situation, but we have never truly done some serious DD offering the real answers people need, and that is what I am going to address once for all in this video. Expect to know the significance of Evergrande, why the Beijing government, on orders of the President Xi Jinping, are putting growing pressure on local government and companies, and what it means for China in the end overall. Quickly, I made a video yesterday talking about what to expect for this week, so be sure to watch that video for preparation. I also started a new Discord, so come join it. Both links for the video and Discord will be linked in a pinned comment down below. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. The Chinese government has been making a lot of changes as of late. Last year, the government's State Council accused officials in the county of Bazhou of extorting private sector businesses. Bazhou is located 56 miles south of Beijing, or 90 kilometers. China's State Council, one of the most powerful arms of the Chinese government, says that the local government has been violating both the government and Chinese Communist Party orders by engaging in a fee collection spree from small and medium-sized enterprises in order to offset their own declining land sales and tax revenues. According to documents, the Bazhou government ordered officials to bring in $47 million in new revenues, mainly through the imposition of fees and fines. Over the course of just 9 weeks, 2,500 local businesses were hit with penalties. You see, Bazhou has been greatly affected by the crackdown of highly leveraged real estate developers, like Fantasia and Evergrande, who have defaulted on payment to investors and brew up monumental problems for the economy overall. As a result, Bazhou thought it smart to target small and medium-sized businesses and entrepreneurs, with ridiculously high fees, hurting the interest of the businesses, and as the State Council said, severely damaging the local business environment and undermining the credibility of the party and central government. This story gives the appearance that the State Council and therefore, the central government of China cautiously protects the interests of the small and poor, bringing balance and consequences to those that hurt the progress of others, but the reality is starkly different. A closer look into the central government policies of China will show that they themselves are not that different from the officials in Bazhou. Over the past couple of years, Chinese President Xi Jinping has ordered his administration to launch campaigns targeting different areas of businesses, from the private technology sector to even the education sector. Their latest target was Evergrande, after the government started imposing debt limits in order to purposefully bring about the collapse of the giant real estate company. Now, Evergrande is on the verge of collapsing with the country's biggest bankruptcy case in its entire history, and its potential fall could erupt a series of dire consequences for the rest of the real estate sector. The liabilities the company have are equivalent of 2% of the GDP of the entire government. When you add up all the things happening, you will see that China is handing down unprecedented levels of pressure to the country's biggest employers, the local governments and the corporate contributes. You see, back in early last year, officials look at the pandemic and how China was performing. They noticed that they were making a really good comeback, and that the pandemic brought a lot of opportunity to finally tackle on some of the critical structural challenges that the current administration was imposed with. As such, these crackdowns we are seeing are nothing more than the justified means, viewed as necessary by officials, to eliminate a lot of the financial risk that they perceive could implode and deal a massive blow if they are not addressed. Their President Xi has been working hard to take any and all advantage to transform the country into what he would deem a better and stronger version of itself, and in order to do so, he has to break some things along the way. It makes perfect sense if you think about, why not take advantage of market conditions to get rid of hindrances that you know are negatively affecting the common prosperity of your nation. However, it is not until you start plugging in the numbers that you realize that all the changes Xi and his administration are bringing are stressing their economy to the point where alarms are starting to go off. Chinese economic output rate has been slowing down. China's third quarter output expanded 4.9% year-on-year and just 0.2% quarter-on-quarter, down from 7.9% and 1.3% respectively in the second quarter. Looking at these figures makes any economic official doubt the efforts and recent actions by the current administration, and makes us wonder if things are beginning to get out of control for President Xi. The costs to rectifying balance are huge, and because the real estate sector influence over every other aspect of the Chinese economy is so big, I think the Chinese central government might have underestimated, to say the least. Remember, China's real estate accounts for 30% of the total economic output. Furthermore, now we are getting reports that officials' public display of confidence are all lies. If you have been following and watching this channel for 2 months, you know how I have talked about how officials keep on lying to the public, saying that the real estate sector will be fine and to not worry about anything because all things are accounted for and under control. I have mocked this marketing tactic a lot, calling it a blatant lie. Well, we now have reports that, behind closed doors, government officials are getting incredibly nervous, anxiously asking about housing downturns, higher debt levels and slower growth. The real estate crisis happening right now has had horrendous consequences on the local economies. Many officials from different municipalities have come out anonymously to the press to speak about what is happening indoors. They say that the Chinese central government wants them to keep the governments up and running, but that if their land sales continue to weaken, they will have problems making ends meet. Some of the land sales in the municipalities of these officials have fallen down 30% compared with the same period in 2020. The officials talked about how the problems are starting to spread and grow all the way to their personal lives. For the first time ever, they had to cancel their annual bonus, which for them it's a big deal since their salaries are not high. Assessing the overall damage that the recent crackdown from Beijing have had on the economy are hard to grasp, but I have some numbers for you. In Bazhou, the effects of the Evergrande crisis were felt for months before crisis even proved to be terminal. The county's land sales revenue fell down 90%, and more land auction failures have been taking place. Debt levels continue to move up, but at higher rates during the last couple of months. Local government officials complain that they, not Beijing, had to foot the expensive bill for Evergrande's collapse, even when it was Beijing's doing. A big thing that most people don't know is that, when the Chinese central government say all prepaid homes must be delivered to the buyers, the responsibility ultimately falls on local governments who may have to pay for construction themselves if developers cannot. Early signs of inflationary pressure are growing as well, foreboding bad things to come ahead. The debt crisis is reverberating through the entire economy via off-balance sheet financial instruments used by developers to evade industry debt caps. This is one of the examples of how for every regulatory action that happens in China, there is a market-driven reaction that helps companies work around the regulations. For example, in response to the red line limits imposed on developer leverage, the 20 largest real estate firms have now issued commercial papers totaling almost 40% more than 2019. In China, it is customary for developers to often force suppliers to accept commercial paper in lieu of cash payments, with the promise to make good on a future date. But if Evergrande fails to pay the eventual holder of the paper when the arranged date comes, the holder can sue Evergrande and every other company that endorsed it, potentially freezing assets worth many times the original debt. In 2020, the total amount of commercial paper issued by Chinese companies reached an equivalent of 3.5% of the country's GDP, with Evergrande accounting for more than 60% of the issuance by the top 20 real estate developers. This goes to show the precarious risk that China finds itself in with regards to the real estate crisis. You now see how everything is built on a paper castle, and that the collapse of a giant like Evergrande will have catastrophic effects on the overall economy. The Chinese government's efforts to restructure the country using the pandemic as a great opportunity have caused them to take unrecognized risk that now threaten to undo a lot of the economic growth they have seen for decades. The central government acts with unquestionable authority, but puts all the leverage down to local governments, who can't bring in the results that Beijing want and who continue to see diminishing returns on investments and revenue. China is in huge trouble, and reports of officials stressing out in all parts of the government are coming out more and more. President Xi better make some serious changes unless he wants to be the reason why China experiences a total market crash and even a full economic depression. And that is all I have for you guys today. I hope to have inspired a couple wrinkles as to the situation with Evergrande and China. Hopefully now you guys have a good understanding of everything happening. Remember to join my Discord link below and become a $25 or higher Patreon member to enjoy some really amazing exclusive access in that Discord and to help the channel out. Watch yesterday's video so you know what to expect this week. Hope to see you all tomorrow on the next video, and thank you all so much for watching this one to its end. With all that said, I hope you guys continue having fun today. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Until then, enjoy the rest of your day and to the moon.